What's up, everyone? My name is Nick. I am a funded trader with Apex, and today I thought I would go over sort of like exactly what my strategy for trading the NASDAQ is. I have three funded accounts with Apex. I'm halfway through getting a fourth. If you watched my video that I put out yesterday on Friday, you'd have seen I traded actually pretty horribly last week in general and pretty much broke even. And I thought it was a really good opportunity to sort of take a step back and go, okay, I've had some real good success getting my free accounts funded, taking one of my funded accounts pretty much to the point where the trailing drawdown goes. That's sort of like about 2,400, I believe, on that account. And to go, I haven't been trading my best the last week. I broke even. Let's go back and actually review exactly what my strategy is. And I realized that although I kind of have a playbook, I've never sat down and really written it out clearly. So I thought I'd do that here. And yeah, share it with you all. I think that this strategy has a really high win percentage. I think it's pretty simple to implement, and therefore it's probably the perfect strategy for anybody who is relatively new to trading or is really struggling to find any sort of consistency. So hope you find this useful. I'm going to go through the playbook itself. I'm going to give some sort of drawings, and then I'm going to give some live examples as well. So to start off with, I'm just going to talk about what I use. So this is NinjaTrader 8. It's you can use this or Trader 8, and I use this for my charting. It's pretty straightforward. I'll move that out of the way for a moment. It's pretty straightforward. I do have a video which I will link in the description as to how I get this exact setup. When you first get it, it has loads of grid lines. There's this crosshair isn't here. It's all a bit of a mess. And I think this is just a very clean way of looking at price action. I use the 800 tick chart. Honestly, it's kind of similar to those who aren't sure what a tick chart is. It's close to the 30-second chart when we're sort of like in sort of like the 9, sort of like around 10 a.m. You can see these candles are taking up around about 30 seconds. You can see down at the bottom it looks at the time. But depending on the volatility, when we go through a more volatile period like at the open, these candles are normally in 10 to 15 seconds in the making. And then later on in the day, when it calms down, this is going to take a couple of minutes. And the reason I use this, honestly, I saw someone else use it. I thought that looks kind of nice, and I began using it, and it works pretty well. So I don't think it really matters what time frame you use, but if you want to trade the strategy that I'm trading, and I'm going to say it has a very high, has a very large edge, I believe, then that's why I use the 800 tick chart. I'm going to remove for the moment these entries. So you see 800 tick chart, and then the moving average I have is simply the 50 EMA. I don't have anything else on the charts. I did for a while have the 25 EMA, but I realized that wasn't really all that necessary. You can use it in conjunction with this if you like. I do have it on this chart here. I'll bring this over. And the idea of the 25 EMA originally was to make sure that my entry, if I was going short, was below the 25 EMA, and if I was going long, it was above the 25 EMA. But I would say that 9 times out of 10, the fact that the price is where it is a trade anyway. So you can use it. I began, for me, when I have multiple lines on my chart, it begins to be like, oh, do I want to take a trade because of this or this or this or this? And I like to have just one clear thing. So that's why I use the 800 tick 50 EMA. This is my playbook, and this is my strategy. So number one, we are looking to identify a high or low made in the current price action and see if this was previous support or resistance. And this is really key. A mistake that I've fallen into a few times is by having levels drawn on my charts beforehand. And this is I'm not saying this is a really bad way of trading or anything like that, but I find that when I have levels drawn from the previous day, even though on this particular example they worked really well, what ended up happening is that I began I can begin to use these lines when they're not actually relevant. So this is a really good example here where this level that was a very key level from pre-market and the previous day, you can see it wasn't relevant in the current price action. So the mistake I made was using this level too much to determine I should be taking trades. So what I prefer to do instead is to wait for a level or wait for a higher low to show itself, and then mark it and be like, was this previous support or resistance? And I find that when you do that, you are using the current price action, which is, I believe, more important than a level set 3, 4, 5 days ago. Now, if you put in a high and it's like, oh, this matches the high of day from yesterday, you know, this here, for example, where, just get rid of those, if we put in this high here, for example, it matches up pretty nicely with the pre-market high from the previous day, which was actually the high of the year. So we can now say with a certainty, yeah, this is a really good level because we previously had this resistance in here. So great, we've got that level. We can be certain that this is now an area of interest. And that's a really key factor before we go anywhere else. Waiting for that level to identify itself to match something else, that is critical, because until you have that, with this type of strategy, you have no edge, or you have limited edge. And by that, I mean, until you have this type of situation, any setup you use, or until you have a situation that, I'll use this for my strategy, until I see this situation, any flag, any hold of the 50 EMA, anything, is a guess, and you're relying on one side of the market to continue to be strong based off of a breakout or a recent move. And that, for me, isn't enough of an edge. When you wait for this level to set up, you can have that confirmation that you go, okay, sellers have come in at this level that they previously did before. So we can be fairly certain that there's going to be buyers still, but there is too much strength from the selling side, which means that the people who are buying are going to have to get stopped out. And it also will encourage more sellers if we fail to push higher. Okay, so that for me is really important. To wait for this is pretty critical. If we do have a level that matches a previous level, we want to wait for a break back. It's interesting when I'm saying back. Break back through the 50 EMA, and the break should be fairly clean. So essentially what I'm looking for is that sort of like, is that high to be, or low, but a level to be retested, get back below the 50 EMA like we have done here. So we're getting back below the 50 EMA, and then I can be pretty certain saying, okay, my edge is in play now because the sellers came in, they defended a level that they previously had, which is great. The current price action matches up with previous price action. So you've got traders today knowing that's the high. You've got traders looking at higher time frame going, that's the high. And you've got confirmation that those sellers came in by this sell through here. So now I can comfortably say the situation where I have an edge is in play. We then want to look for a pullback to the 50 EMA as a lower high or a higher low. And the reason I wait for this is I don't want to get into a trade and chase a high or chase a low for it to come back. And also when you get that pullback, like we have one here where we get this pullback. So if we've rejected, we've sold off, and we have this pullback, and when it puts in that lower high and begins selling off again, we can see that a lot of people are going to begin, put in things like, okay, now I've got a trend line, so I want to continue selling. Or they're going to use, I don't know, some sort of Fibonacci retracement tool. Who knows what they would look at that. They'll go, oh, look at this. This came back to 50% or the 61. You essentially, when you get that pullback, you get more sellers interested in the trade, which puts you in a better position than if you just trade, a low breaking or just jump in the trade. So for me, I believe that waiting for that pullback, all you're doing is going, I've got the situation which is important, and now I want to identify a good space to get in, a good place to get in. We want to enter 2 positions. Now I've put positions because you could take 2 minis like I do. You could take 4 minis. You could take 8 minis. You could take 20 minis. You could take 10 micros. You could take 6 micros. It doesn't really matter. But you want an even number so that you take half of the position is going to be for target 1 and half is for target 2. Okay? So you're entering 2 positions at the point where momentum is likely to come in. And this is really important because it's actually been the biggest cost for me. If you get in before momentum is likely to come in, then you open yourself up to having you're getting into a trade before a trigger, which is always horrible. But also it means you can end up with a pretty bad position at the bottom of a consolidation period, for example, before we actually get that momentum, and you're very likely to get stopped out even if you were right in the end. So it's very, very critical when you're taking this type of scalping approach, which the first piece is a scalp, second piece is arguably close to a scalp as well. Enter when momentum is likely to come in, and the way you can do this is by looking at price levels. For example, I don't particularly like taking trades if my entry is at like 16,897 because I know that it's going to run into 16,900s and probably struggle. That's not going to say I won't ever take those trades, but that's a consideration when I see that. Similar with like 75. Do I really want to be getting short at like 76.50 when we've got natural support coming in at 75? Possibly not. So you can use those sort of things if you like. Also, simple things like consolidation area. So we had a long setup here, which we'll go through in a bit. And I was like, well, we can see here we've got a bit of a holding area. Where is the momentum likely to come in? Well, it's likely to come in when this area has a breakout. So in this instance, you could either use this or you could use something like this. So when this area clearly breaks, and this is where we're likely to see buyers, that's where you want to be getting in, somewhere in here. So this just does take a bit of intuition, a bit of time to get good at. It's, like I said, for me, my biggest mistake currently is the thing that costs me the most, getting in before momentum comes in. It's just something that you have to build over time. And you put your risk to the high or the low of the flag consolidation area. So in this instance here, if we did get in on this break here, on the break of 60 around here, you would put your stop to the low. And it doesn't always have to be exactly the low, but typically if that low's around about 10 points, it's a good place to be. I like taking 10-point risk on NASDAQ. It kind of works out to be about right most of the time. So in this instance, you'd put your stop down to here. But there may also be times where you have a different kind of pullback where you want to risk maybe a little bit lower or a little bit higher. For example, this here, where you could have got in, if you had got in around here at this sort of like 105 area, for example, risking all the way down here doesn't really make any sense because the momentum's come in. So you might instead want to risk to maybe here. Maybe you'd have gotten a little bit earlier actually. Maybe you'd got in like here. So you're in at like 1603. Well, we can risk to the lower the body of this candle. And if we get back down here, our idea has gone. So you want to be... I don't like being too robotic with everything because I think the market is very much a moving animal, if you like. So if you look at roughly where the low is and go, I want to be in the ballpark of 10 points and then see where it makes sense. And if you're taking a breakout trade rather than a flag trade, which we'll talk about in a sec as well, and the differences, then you can often put your stop a little bit closer to the entry compared to the low of consolidation or high of consolidation because you're expecting to get that move straight away. Now for the fun stuff. So take profit one. Your target is going to approximately be 1-to-1 or to the nearest area of support or resistance. So if you are risking 10 points, you want to target in the ballpark of 10 points. I am a really big believer of if you get 7, 8 points and the price is not really ripping, take it off. There's no point holding out for 2 more points and essentially putting yourself at the risk of like, this trade might now turn around and be a loss and it could have been a small winner. When you're trading a strategy like this, to make it as profitable as possible, to make easy money trading as profitable as possible, you need to be locking in wins over and over and over. Now, that doesn't mean 3 points take profit, but it does mean that if you are risking 10 points and it gives you 7 really quickly, and then price isn't really doing very much, try and get it out for 7, and don't be afraid to cut it a bit early. I wouldn't begin cutting it for like 5 points unless you're in a really slow, choppy market that isn't really going anywhere, and you end up saying, I'm just going to lock in some profit because I don't trust the momentum is really there at the moment. That's fine. But for the most part, you're aiming for around about 1-to-1. And also remember, we're going to be cutting our stop, which I'll talk about on the next point. Because we're going to be cutting our stop a little bit every now and again, it means you don't always have to go for the full 1-to-1. If you go for like 70, 80%, that's probably what your average stop is going to be. So you're going to get 1 to 1 anyway. Now, take profit 2. You want to aim for 1 to 3 on the original risk. But again, don't be scared to take this off early. For me, the worst thing is if I get a position and I'm risking 10 points on it, and it hits my take profit 1, and then we keep on ripping, and I'm up 24, 25, 26 points. We're very close to my take profit. If that comes back to break even, then I've essentially, at that point, I'm risking $500 of profit to make an additional $100 of profit. So the closer it gets, the more inclined I am to be watching, and if I begin seeing price slowing, I'm just going to take it out. And although, yes, there have been times where I look back and go, I could have got an extra 5, 6, 7 points on that. There have been more times where I have gone, I moved my target a little bit early, and it stopped me from coming back and breaking even. And I think that happened about 4 or 5 times recently where it wouldn't have hit target, and that's that's $2,000 more than if I had not taken the trade. So again, you're targeting 1 to 3, but if we get within that sort of like, if you're 80, 90% of the way there and price isn't going, just take it off. Don't be scared to take it off. Now, your stop can be moved once the momentum starts to pop to cut the risk. So for example, on this trade here, if we got in here, once we got this first push here, we'd have probably been looking to take profit anyway. But once we got this first push here, we took out this 1805, we began pushing, I'd be moving my stop probably up to maybe like 94, and then maybe like 97, 99. Because there's no reason at that point, once you got that move, the momentum's come in, you were correct, you nailed the momentum. If it now turns and fails, or all of those buyers are now potentially going to be sellers. So every time you're in a trade, you kind of want to ask yourself, you can't, but like you want to think of yourself being able to pause time and going, with the price where it is right now, where does the stop make sense? The momentum has come in, it's popped 5 points. I don't need to leave my stop at 10 point full risk. I could move that up now to 5 points risk. So you want to be adjusting it slightly. I don't tend to move it that much. I would say that on average I take around about 70% stop. But do that a little bit, and then once we get our first piece out, if it's a flag, so if we have a trade like this where we've got a flag and we've got in pretty low on this flag, and I take my first piece out up here, like 811 or whatever, lock in 7 points or so. At that point on a flag, I will move my stop to break even, and I will then try to get 1 to 3. And in this instance, you can see it didn't get to 1 to 3, but depending on where, I don't think this would be the exact. I think when I did it before, I would have actually got in here. I think was it. So you can see here, like we would have been targeting 32. We got within 3 points of that. In a slow chop mark, just take it off here. Don't be scared. Be like, hey, you know what? I'll take it off at like 26, 27. I'll lock in a really solid trade. That's fine. But once we've got that first move on a flag, I'm moving my stop to break even. If we have a situation, on the other hand, where on this first trade here, which we were talking about, this is more of a breakout trade. And what I mean by that is there's no flag to target. If we look at this, we had this really nice flag. Getting in here, well, my first target's going to be down here. And then I can move my stop to break even because we may well reject this. But in this instance, because we've broken out, what you may find is that with breakout trades, they have a tendency to break out, give you that move, retest this area a little bit, and then go. And this is just something I saw through testing. And therefore, what I will normally do is I'll take that first piece off, but I'll move my stop to not quite break even, to give it a little bit more room to breathe. And then once I see, yeah, you know what, we are continuing. So in this instance, once we got that move, we dipped out a little bit here, and then we began pushing. At that point, I'm saying, okay, yeah, we've tested, we're still going. Now if it comes back to my entry, I don't want any part of it. And yeah, so that is my playbook. Now, I've gone through a few examples there anyway, but what I will do really quickly is I will draw out what it looks like, just so there's no real confusion whatsoever. So what I'm looking for, and there's a few different variations, is this. I'll move my face out the way real quick so we can see. So let's say that we push up, and I like bigger moves higher, but let's say we'll do something more like this, where we're grinding higher and we end up putting in this high here, and we come up and we test it and we fail to go. So what we've got straight away is this level here. Let's put in this high, but we can see we've kind of put in a bit of a double top. This whole area is resistance. So I'm saying now, okay, my setup is in play. If we continue along this line, even better is if we get like a head and shoulders. That's even nicer. And I'm going to just put it like this. And let's just say the 50 EMA looks something like this. I'll change the color in a second so it makes it a bit clearer. So this is our 50 EMA. What I'm looking for here is I'm going, right, we've put in a high, we've tested that high, and we failed to really break out. And one thing I really like, which I'll point out in some live examples, is when we get price action that looks a bit like this, and it begins to just sort of flatten out in that area. It's like, it's not really going. Something like this is ideal if you get a sort of chart that looks like this. But in this instance, just with lines, we've come in, we've rejected that area. We've kind of rejected it again here as well. We've put in a head and shoulders pattern, which is which is ideal for this. We've got back under 50 EMA, and I would be looking now and saying, okay, where is their momentum likely to come in? And depending on how severe this this sort of price action would be, I'd either look for this flag, or I would probably consider this area here and say, okay, this is where the break is likely to happen. We would then jump in, if it was this, for example, jump in on the momentum break. We'd be risking to around about here, and we'll be targeting down here. Just ignore the numbers for now because I've zoomed in on price quite a bit. So this is an ideal opportunity to the downside. If we look at the same thing now to the short side, we've been selling off, selling off, selling off, and let's say we put in this low here and we bounce, and there was a low from like a few days ago, or from the previous day or pre-market, that was here. So we've ran into that area and we've began to hold as support. And let's leave it like that. And again, the 50 EMA is going to be looking, something like this. So we've got the same kind of situation where we've got an area that was a previous area of support that's held. We're back over the 50 EMA, and I'd be saying, okay, we're either looking at this flag or this momentum break, depending on how severe this was. Like if this is a 10, 15, 20 point move, I'm looking to take it. If it's only a few points, maybe less so. And I'm then looking for that bounce. So these are pretty straightforward, like reversal type plays. But what about when the price is heading up or down fairly consistently? And this is something that we've seen more so this week, where we've got price doing this. So what I would probably begin doing, okay, is looking in this instance. If we draw our 50 EMA in now real quick. Okay. What I'm going to be looking at is, okay, this low here that sells off, we didn't get a short setup. Ideally, we got this double top in here, ideal for a short setup. But this low down here, does it match a previous level? And we can see that it did. So we're now going, okay, we've held a previous area of support from earlier on in the day. We get back over the 50 EMA, we flag, and there is our long opportunity. And then the same again to the short side. So they are essentially my patterns. Now, I did mention something in there that I think is important. Bring my face back over as well. And that is looking for price action, which indicates we have support or resistance. And I like to call that just sideways price action. So we can see here, when we put in this double bottom at low of day, okay, and we can see that it was also this support here. When we came into this area, we began getting choppier price action, right? If we look here, we started to not, this is more of a bounce, but we can see that across this whole area here, when we've come into this area, we've actually been fairly sideways. And this for me is a really big indicator that the sellers have lost a lot of their momentum. So that's another key thing to look out for. And as I mentioned here, this was the high of the year area, if you remember. We have the same thing where we're uptrending, then we come back and we're just starting to flatten out. We're starting to look like we're plateauing. And when you get that type of price action combined with this level, it's a really, really good indicator. I'm sure there's lots of people who would take this exact trade here and get in short and fine. But that is something that you really want to look out for. And same again here where we've got this low, and again it came down, but the price was acting slow. It had this move down, but it begins to just be a little bit more sideways. Not quite as good an example, but there you go. So what we'll do is I will take us back now to we'll go all the way back to Monday, I think that was a good day. And I'm just going to go through this week's worth of setups. There were actually quite a few. One thing I will note, I used to trade this setup with breakouts. So there was actually an example of this that I tried to trade on this day where we break out of a level that had been tagged multiple times. We pull back to 50 EMA and flagged. I have since stopped trading this because the win percentage is not particularly high. I think that when you trade like this sort of like break and retest approach, there are other caveats that you need to take into consideration. Time of day, momentum, how strong are we on the daily chart? Has there been any really positive news? And that for me just complicates things, and it's where I tend to make mistakes. So that's something that I have recently really cut out from my trading or in the process of. So let's go through and identify where we have really clean opportunities. So this price action, pretty dull and boring, and we don't really get anything of any interest until we get this pullback in here. And what we want to do is identify, does this pullback match a previous level? And we can see here, and this is something that I've actually seen quite often, the initial high of day is right here, and we've pulled back into that. The initial high of day on a move like this is fairly significant because it can hold as support. So I will definitely consider this. And we also had in this area, this previous area of support as well that held. So we've now got a situation where we've got a level that has been used before as previous support resistance and therefore is in play. The next thing that I'm looking for is for it to get over the 50 EMA and hold. Now this is, I'm going to be honest, super close to not being a legitimate trade. This is right on the border because it broke below the 50 EMA by a little bit more than I'd like. You know, the 50 EMA is chilling here at sort of like 365 and we come all the way down to 56. It's just about okay. If I was looking to take this trade, I would be going, where is the momentum likely to come in? And I'm looking at the price and I'm going, I don't want to get in at 65. And I'd probably here be saying, I either want to get in at 71, or maybe what I would do is consider waiting for this area here to break and get in at 75. Let's just say that we use this candle here, 68, and we said, okay, we're going to get in on the break of 70, and I want to get in at 70 and 50 cent, for example. And I don't want to risk all the way down to here because this feels a while, because a way away. So instead, I'm going to risk down to around about here, 59.50 maybe. So I've got 11-point stop on the trade. We can see that we've ticked our boxes. We've held the area of support. We've come down. We haven't quite held the 50 EMA. I believe I actually took a trade on this in here and got stopped out. And this happens sometimes. You know, I got stopped out. I tried to take the long here, got stopped out, didn't re-enter in this instance. But so you'd have taken a loss on this, but the setup was still there. There's the opportunity to go long at 71. We look at the next area of resistance. We can see we've got the high of day and this high in here. This sort of like area across here is acting as pretty stern resistance. So as soon as we get into this area here, around about 10 points actually, I'm going to be looking to taking half the position off. And when I do so, I'm going to move my stop to break even. I would then leave my order in, and because this was pushing to 403, honestly, when it got into the high 90s, I'd probably be happy to take this off for around about 25-point gain on the second piece. So pretty clean setup there. Next opportunity, let's go through and have a look again. So next situation, we sell off, we come down, we hold this low. Has this area held as support before? It absolutely has. This is a very nice clean area of support in here on this pullback, and then even this pullback here, it's the same support area. So this is definitely an area that I can say this acts as previous support. We get above the 50 EMA. Now this one I didn't take because it was so quick, but this is definitely an example of where you can go, we're holding above, we come down, we hold the 50 EMA. Where is the momentum likely to come in? You're probably looking at a similar kind of situation in this as well. That's sort of like, you know, in the 70s area. So if you were to take it at say 71, 72, 73, and risking again around about that sort of like 10, 12 points or so, you take half the position out when we get around about a 1-to-1 move into sort of the 84 area, and the rest again would be looking at high of day. I would probably be taking off a little bit early, but you can see The key here is the situation. We've held a previous area of support, we've got above the 50, and now we're looking for a hold of the 50 EMA and a subsequent momentum entry. Skip forward now to Tuesday. So on Tuesday, we had a low that's set here, and this is a slightly more difficult one, but it is legitimate. We had this low that's set here, 936. We try and take it out, and we fail. And critically here, we failed. We took it out very aggressively, and then we just began holding that area again. So we can definitely see this as an area of support that held. We get back above the 50 EMA. We get a very clean move back down to the 50 with a nice flag. And I would be looking probably to get long here around about 435. And my stop would probably be in and around this sort of area, around about 11 points again. First target, easy 10 points. And then our final target would be 68. And, you know, again, if it pushes into here and begins slowing down, I'm just going to take it off for, again, 25, 26, 27 points. So pretty clean trade there. There were some messier opportunities in here. I'll show them just to give you an example. This isn't the cleanest, but an area of support held. It's not as clean of a pullback, but it's fine. We got a pullback to the 50 EMA. You could have gone long in here and taken a small profit. Didn't work out all that for a big move at least. And this is the thing, like you're going to get a ton of setups where we put in a double top, we flag, we don't really get a short setup. We then hold an area of support. And we kind of get above the 50 EMA, we get this quick pop. You can see here we get above the 50, we put in a bit of a flag. We're holding. You could have bought the breakout here at like 92, risking like 10 points or so, got that push into the 500, take the profit and run. You could have also potentially after that seen once it began holding the 50 EMA area, could have gone long again here. Really the key here is to understand the situation where you have an edge. And once you have that, and once you get really good at identifying that, you're going to find that the actual entry, as long as you can justify it's holding as a higher low above the 50 or a lower high, and this is where I'm expecting momentum to come in. As soon as you can justify that, you have a trade, you have an edge. You could even on this one, for example, wait for it to get back above and have this pullback and then take it long here for a quick move there. Let's move ahead now to Wednesday. This was the day that there was an FOMC thing happening, so I did not get any trades here. I don't believe there was a long by the looks of things. And what you'll find is like FOMC days are not normally as good to trade because there's not as much momentum early on. It can be a bit choppy, but it held this low. It then put in this flag just above the 50 EMA, could have gone long here, possible opportunity for some profit. I'll skip past this day because, like I said, there wasn't really a huge amount going on. Later on, there was some momentum that came in. I don't particularly like trading that, but there was potentially opportunities. Now moving on to Thursday, and Thursday, this was very difficult price action to trade, and this is good because what I like to see is a strategy to be good. I like it when there's difficult conditions. It either gives you very few setups that therefore you don't lose very much, or it still gives you some setups that work. And this did exactly that. So we had this low here that was tagged a couple of times. We came above the 50 EMA. We tagged the 50 EMA. Nice long here at sort of like 805, risking probably 10 to 12 points. It gives a quick move up here. 10 to 12 points, lock in some profit, rest move to scratch. The next opportunity, and this is where you have to be quick with these as well, is to understand that, hey, look at this. This was a resistance area, tagged the same resistance areas here and here, gets below the 50 EMA. So always be wary of like, what has the move recently done? And this was the actual trade of the day. Could have got short around 86.50, probably risking in the ballpark of 12 points and a very, very clean move. Here's an example of one that I would not take. So this low here, major sell-off. It did not match any levels from previously. So I did not consider this an area of support resistance. We actually got a setup, but this is not for me a trade. I'll quickly go through Fridays. We've already looked at quite a few of them. So there was this sort of double topping action in here, followed by a flag, which you could have got a little bit of small profit on or a very small loss. There was then a this low here that held. There was then an opportunity to get in long here, and there was a really nice opportunity to lock in some profit up here. Two trades. We then had two setups later on. This was, remember, the high from the previous day. There was a consolidation period here and then a flag here. Both of these are legitimate trades. I tend not to take multiple flags. If we've had a flag, had a big sell-off, I'm not going to take the next one. But in this instance, small consolidation area, there's just short for a small profit, then a really clean flag. And then later on in the day, there were at least one, maybe two. I saw this and I took a long in here. Double bottom at the low of day, holds above, nice long here, and then of course this cleaner flag here that gave a bigger move. So like I said, this strategy, the reason I'm sharing it is I believe that it's an easy to understand and easy to execute strategy. The main compartments of it, if I just bring up the playbook again here, the main compartments are identifying when you have an edge, which is looking for that high or low in the current price action, matching a previous high or low, a double bottom, a head and shoulders pattern, these kind of setups. And then the next stage is essentially you're waiting for that area to hold as support resistance, confirm itself, put in a higher low or lower high. The 50 EMA, the reason I use 50 EMA is simply because I think you need to have a cutoff point somewhere. So I put the 50 EMA on just as a guide. It seems to work really well. I'm sure other moving averages also work well. And then just get really good at timing where the momentum's going to come in. And what you're essentially doing is you're going, I'm only going to trade in the situations where I can see one side the market has kind of taken control. It's held a level. It's confirmed it's holding that level by putting in a higher low or a lower high. And then I'm entering the trade when I see momentum likely to come in, when the market has taken a breath and when momentum is likely to come in. If you get really good at timing that momentum, this strategy works in the ballpark of 70% of the time. I will really quickly pause this and bring up my... Actually, I can't pause it. Let's see if I can bring up my journal real quick. And I'll show you the numbers. So I'll move this out of the way. So this is how I journal my trades. And off to the side here, I have my different results. My own personal results, okay, where these are the trades I personally have taken, are these here. This is over the past 58 trades. 70% of these trades have been accurate. That means that around about 1 in 3, slightly less, I've made a mistake on, okay? For me, it's a really good indicator if you're in this sort of 65, 70, 75% accuracy to be profitable is you've got a big edge. So a 70% accuracy, 7 out of 10 trades are correct. Total profit of 218 points and 218.5 points. The win percentage for me has been 62.1% because of all these mistakes. My risk reward is around about 1-to-1. You can see my average loss is around about 16.5 points. My average risk is probably closer to 20. Now, if we take into consideration the trades that I've taken, which afterwards I reviewed and gone, that was 100% legitimate trades. There was no mistake. I got in, I met all those criteria. You can see that we only had 40 trades. The accuracy here is 100%, obviously. Of those 40 trades, we had 82.5% winners. I also missed some winning trades in here as well. So that would suggest over this period, and this is... this started right at the end of November, I believe. Yeah, November 30th. So essentially 2.5 weeks of price action. This strategy has had an above 80% win percentage. It's had a risk reward of 1 to 1.23 and has made a total profit of 464 points. Now, like I said, I've actually missed some trades in there and I've taken some others that I think I classed as correct, which now I wouldn't do, which I think have pretty much broken even as well. You can see like 50 points is $1,000 with the size I'm trading. So that has made over $9,000 of potential, which is huge. And this is a very simple, easy to execute strategy. So I'm going to end the video there. It was a long one. I hope you gained a lot from it. Like I said, I wanted to share this video partly to get myself back on track because I didn't trade great this past week, but also to share a strategy which I think is just easy to execute and easy for someone to pick up. So Hope you enjoyed it. Hope you found it useful. If you are interested in implementing this, let me know in the comments down below. I'd be more than happy to, to discuss this on Discord or something like that if you're interested. But yeah, thanks for watching, and I'll see you again in the next video.